day, everybody. Welcome back to another episode of the Five Goats Real World Asset and Tokenization podcast. Today, we're going to be talking about a different spin on tokenizing and what's going to be happening out here for debt financing. Today, we have Manish Gadia. He is from Vayana, the head of emerging technologies, and he's going to introduce a platform that's going to be coming to market that they already have billions of dollars running through their system, and how tokenization is going to transform what they're doing over there. So Manish, welcome to the show. Thanks for joining us. Please just jump in and give an introduction for the audience and let us know who you are and how you got here. And then we're going to deep dive your platform.
Thanks so much, Brad, for the invitation. Firstly, must appreciate Five Goats. When we started out developing our tokenization module, Five Goats has been very instrumental. I've seen each and every YouTube videos, whichever Five Goats publishes. So I'm really appreciative of the good work that you are doing. I'm a very boring person, so I'll keep my introduction short. Been a very boring banker, Brad, for about 20 years. 10 years with banks such as HSBC, 10 years with Development Bank of Singapore. Went on to head the transaction banking SME division at DBS. And DBS, as you know, for consistently, 3-4 years, I've been rated as the world's digital bank. And that is where the digital bug kind of bit me. The adage of every company would be a tech company kind of hit me, and it got reinforced in the bank. And which is where I decided to work in the ground zero, and which is where I got an opportunity at Vayana to head their emerging tech platforms. So as against being on the fence, I chose to dive in, and here I am leading the emerging tech platforms.
Awesome. Thank you. So let's just jump into the model here. So we're talking about trade financing. You have a network. So can you just backfill us on what was the original vision? How did you guys get started? And then let us know what you've created so far.
Thanks. So Brad, I would answer that by outlining what my company does and why this need of a new division, and how this new division, which is ETP, Emerging Tech Platform, kind of ones up to what we have already been doing at Vayana. So about 3 years back, Vayana used to call itself as the biggest supply chain player, and which is where the likes of World Bank, via AFC, we got some credible investors. We've gone to the vision of just facilitating supply chain to become an end-to-end B2B trade finance facilitator. So you may be in any segment, be it SME, be it nano entrepreneurs, be it mid-market corporates, be it on the receivable side, be it on the payable side. We have tech stacks to facilitate that. Now, we don't finance ourselves. We are a tech-first player. We provide the technology wherein liquidity providers can use that so that they can facilitate the finance. Over the years, we've understood the segment, and we know that it's not just the financing. There are other needs of the players which are in the supply chain. It may be in terms of compliance. It may be in terms of aiding their commerce. We've slowly diversified into the other sectors as well. From a number perspective, Brad, currently we do about $1.2 billion of facilitation of supply chain finance spread across around 15 to 16 liquidity providers. We have a regulated cross-border marketplace, invoice marketplace in an offshore location of India, which is Gift City. We've got a regulated payment aggregator license so that we can do some bit of deep tier financing. And, so those are our really growth verticals. The founder had a vision that, again, the vision was subscribed, wherein technology will play a very important part in the years to come. And a blockchain as a technology would be a common denominator. Beyond the use cases of blockchain, which is just about trading on speculative coins, there would be some real world blockchain use case, and finance would be an important part of it. And that is where he decided to set up this division. The vision remains the same. How can we solve the B2B conundrum using this, using new technology? Can we go real deep tier using this technology? Can we come up with a platform which may not just be, let's say, India specific or let's say UAE specific? Can it be a really true global platform where capital movement from let's say a surplus country can move to a capital deficit country? With that vision, we decided to create this new division and this product called as VDP. VDP, I'll just give you a brief overview of what we have created. VDP is a SaaS product. It's not just a SaaS product, it comes bundled with a lot of services, which in the subsequent questions I would answer what all it entails. If you are a private credit player or if you are a lender, you want to run your own debt marketplace using a technology such as blockchain, which is far more efficient, which is safer, wherein the capital movement can happen on real time as against through a normal banking channel, which may take days. You can immediately just plug and play this technology, the product that we have. So we've kind of SaaSide, if there's a word called as SaaSized, we've kind of completely given a plug and play solution from day one itself. You can just plug it and get on going. So that's about my division, as well as a brief introduction what VDP as a platform, what it does.
Excellent. Okay, so let's run through this and let's talk about how your platform allows individuals or businesses to take the real world assets and create this debt financing marketplace, and how that whole interaction happens.
So, Brad, even when I was in my earlier roles in banks, I've been always studying this blockchain as a technology. One thing which always deterred me was the kind of complexities, the kind of jargons which people used to use when they often talked about blockchain, and which is where when I used to read it, I used to always find real world analogy. For example, they would use smart contracts. For me, it will be just self-executable programs which will be running, which will remove manual interventions. They would use words such as permission, non-permissioned. For me, it will be KYC, non-KYC. They would use words such as stable coins, tokens. For me, it was just assets, or let's say a form of currency. So I felt that there was a need for simplification of this technology, and if at all scale has to be derived, all the ecosystem which was being generated around blockchain, they would have to come down and simplify the technology. You really can't expect real world, with so much of entry barriers. In fact, I remember even now, Brad, even when I stake now, sometimes it takes me about 30 minutes just to put up a $50 up for investment or staking onto a protocol. It's still so complex. Uh, I have various techie friends who still find it difficult to use a Web3 wallet. Even now, I'm talking about October 23. So there's still miles to go. But what the crux of the point was, Brad, that we saw an opportunity that we can simplify this because we've have that experience. We've dealt with real world customers. We knew what they wanted, and so we've created this VDP platform, which will be unlike any other platform that you will see in Web3. When you will go through the demo, if at all you get a chance, Brad, you will see that it looks like a Web2 platform. I think that is what is the difference between us as well as others. There are no entry barriers for a smallest of real world user, be it an SME, be it a small nano entrepreneur. For him or her, using VDP would be just like using a normal internet banking. So for us, interaction with these people in real world has not been a challenge. If they don't like what Web3 wallet, we've kind of integrated with regulated custodians, so they can just create a sort of a bank account like regulated wallet account. So we've made it very easy. We are not facing any challenges so far with respect to interactions with the real world, Brad.
That's very interesting. And it does help that you take a Web2 approach and include this adoption curve of people that aren't going to be Web3 native and deal with some of the early stages of the technology. Definitely. Okay, so Manish, what can you tell us about what's coming next? What should we expect, and what can you tell us about what we should be anticipating to see here on your roadmap, the next couple milestones, like what's going on?
Thanks. Great question, Brad. So before I go on to what we see next, little bit about VDP more, Brad. So let me explain VDP with the help of an example. So let's say you are a fintech lender, a Web2 lender. Let's say you're operating in GCC. Let's say you have a division in UAE, you are in Saudi Arabia, you have a lending business in Hong Kong. At the moment, you're using your banking rails and you are doing inter-country transactions. So you would be borrowing in UAE, you would be lending in UAE, which is the case in Hong Kong as well. Imagine that you can have capital borrowed, on a regular basis from GCC, immediately deployed in Hong Kong on a real-time basis, and can get it back as well. So, which is what VDP empowers. Now, I'm specifically talking about few locations where there are favorable blockchain regulations. I'm not talking about countries such as US or UK, which are still deliberating blockchain laws. So, for between these countries, really the efficiency of VDP can come in. From a future perspective, Brad, we see tokenization really taking up a positive stance in major countries such as India, which is still very negative in digital assets. Countries around US, which is very negative around digital assets. These countries are taking a positive approach towards tokenization. We are building up a tokenization module so that all the real world assets which will be deployed can be tokenized. But again, tokenize currently is just a buzzword. Very few jurisdictions such as Switzerland, I think couple of jurisdictions in Europe. These are the countries. VARA in Dubai has come up with some norms around tokenizations. These are the countries which are facilitating tokenization. So currently, tokenization is still a buzzword, but when the regulations does catch up, our module will be ready so that we can take that advantage. Any debt which we are perhaps coming out with on the blockchain can be tokenized, can be refinanced. We can perhaps set up a secondary market. We can facilitate capital movement of transfers. We can facilitate movement of investments from one country to another using tokenization. So tokenization is coming up next. We recently we participated rather in a MasterCard tech sprint where a few banks got together and created this closed loop permission blockchain called as MasterCard Token Network. The beauty of blockchain, as I said, the common denominator is that whatever I create for a public blockchain, it works beautifully on a private blockchain as well, as long as it's EVM compatible. We could demo there, and we are already talking to a few banks if there are some pilots that we can do get up early. You would be knowing, Brad, UK Parliament passed a law called as M-Letter just a couple of months back, which stands for Model of Electronic Trade Receivables. What that means is cross-border movement of title of good documents, especially, can be digitized. Only about 4 to 5% of cross-border of movement of goods currently, Brad, happens on a paperless form. It's all 95% paper. Once this law gets accepted by English law countries, I see movements happening to digitize trade in cross-border, which is where blockchain is up there to take this opportunity. We would want to come up with solutions to embed ourselves in the cross-border trade as well. And with our initial success, I think we are geared to capitalize that opportunity as well. So these are some of the use cases that we've been working on from a future perspective. And the last one, if the CBDC, be it wholesale or retail, if it's a blockchain based, we've already tested out with one such project where we participated in BIS Project Rosalind. Our product works beautifully if the CBDC is blockchain based as well. So in case countries are averse to digital asset, they are averse to, let's say, even deposit tokens, they would want only the central currency to be the mode of settlement. We believe blockchain would have something to add to that use case as well. So these are some of the future endeavors, Brad, that we've been working from our side.
Excellent, excellent. So you guys have been doing this for a long time. You have huge banking backgrounds and stuff like that, and now we're implementing the latest tech. So let's just talk about the scope of this, like the Web3 and the current scenario. Like, where do you see tokenization going, the challenges from the real world perspective, and especially for you in the debt trade and financing?
Sure. So, Brad, my views are that initially the take-up would be by private players. I'm talking specifically about debt tokenization. Real estate, we all know, have been is doing very well in countries such as US. Even in countries such as India, real estate tokenization is gaining steam. So we are not in that sphere. So clear segregation there. We are into debt finance that too of real world. So I see private credit market taking up debt tokenization and earlier being the early adopters. Later on, it will be the regulated institutions such as banks and all which may come up the curve. So let me just give some idea about why private credit, in my view, would take up tokenization firstly. So we all know the credit gap just in the MSME world over, it's about 4.5 trillion currently, US dollars. Even in developed countries, Brad, US, UK, it runs in hundred of millions of dollars. So it's not like developed countries are also not having any credit gap. So credit gap exists there. Typically, formal finance companies like banks and let's say established NBFCs, they would go for high rated, top rated clients. They would refrain from touching the number two. It's not like the number two category client or borrowers are very bad. It's just that they are not up there. They don't meet the credit parameter norms set up by the bank. A whole segment of private credit is coming up who are okay with little bit substandard risk. I'm not saying completely substandard risk. I'm just saying the one level down. In return, they get higher interest as well. So the private credit market has taken up a real world asset financing really well from a blockchain perspective, and they would be the one who would be developing the secondary markets, which I talked about earlier. The refinancing, if there are tokenized debt instruments put up, they may be just going there and perhaps from a short-term perspective or from a long-term perspective, they would just go and finance those tokens as well. The key would be the regulations needs to catch up. I am a firm believer that any technology, if it has to scale, the regulations needs to come up very well. So if the regulation does come up in the near future, private credit markets will latch up very well. And once the regulations are standardized across countries, that is where you will see good amount of institutions coming up and taking up tokenization. We already have some green shoots with JP Morgan, Goldman Sachs. These are some good names which are working on some bit of closed loop tokenization projects, and the results have been very good, Brad.
Yeah, it's going to be quite exciting. We're still super early. A lot of what we've started with this podcast from earlier research, and that's why we started this media series, was to just be talking about what's going on, because it's really hard to differentiate between the noise and what's real, and who's built something and who's talking about building something. So it's really great to see that that things are moving. And you're right, the regulations are holding up everything. It's going to be a pain point for all of us at this point in time. But when that does change, that all these platforms that we're talking about and we're highlighting, I think that they're going to be the ones that are going to be moving forward very quickly. So I really appreciate your time. I look forward to seeing the product come live. And once you are live, I hope we come back on the show and go through a demo and talk about the progress and what's been happening and see how this is developing.
Thank you so much, Brad. And just to share with you, Brad, we are very close to going live. In fact, 25th November, one of our client partners would be going live in Dubai. Another one would be going live in Hong Kong very soon by end of the year. Talks are there with a Singaporean partner also progressing very well. So far the results have been good, and it's heartening to see that even when the industry had lost trust because of FTX debacle and all, the bounce back have been very positive. The bad apples have really gone, and the conversations we are having with the ecosystem have been far more meaningful. Risk assessment have been far better. People understand risk in a superior way currently, and hopefully in a couple of years time when we talk again, the ecosystem would have developed and we would be sitting on some good numbers on tokenization front as well.
Yep, I agree. And I look forward to our next conversation. And for today, thank you so much, and best of luck for everything. And let's stay in touch and get you back on here as soon as we see the platform live.
Thanks so much, Brad, for inviting me. Thank you so much.
You got it.